Hello. So today, by popular demand, I wanted to consider the recent price action in Bitcoin. And I've been warning for some time that Bitcoin's in a bear market, that crypto winter is here. And bear markets aren't good environments in which to be long Bitcoin. Bitcoin bear markets especially so. But bear markets do also end. And if you can nail the low, you can make out like a bandit. Now, I can see one scenario in which yesterday was the low, and I can also see another in which we head lower. So I'm going to outline them both to you, and you can decide, along with the rest of the market, which is the most probable. And we'll start with the price action itself. Now, $64,000 was the high for Bitcoin. We hit that back in April. It then fell over 50% in just a few weeks, hitting a low of $30,000 in mid-May. And since then, it's had a couple of rather anemic rallies that have petered out around 40,000, and the price has returned to 30,000 again. And so my first comment is this: Bitcoin is extraordinarily volatile. If you can't stomach the volatility, then take smaller positions or take a long-term view. I think Bitcoin will be much higher in 2025 than it is now, and just ignore the short-term volatility. Go to the beach and stop looking at your phone. Bitcoin is less volatile than it used to be, and it will get less volatile over time as the new technology goes mainstream, but it is still extraordinarily volatile. Either find a way of coping with the volatility or accept that Bitcoin isn't for you. So here's the positive scenario. From false moves come fast moves in the opposite direction. That's a phrase you will have heard me utter many times. And many traders call these situations a head fake. And they tend to occur around obvious points of support or resistance, such as Bitcoin at $30,000 now. They often occur at the start of major trends. For example, if a security has been knocking on the door of $100 for yonks, finally it breaks above, everyone thinks the security is broken out, and it then collapses. It happens all the time at the beginning of bull and bear markets. And $30,000 was an obvious area of support for Bitcoin. It tested that level 3 or 4 times over the last month. Yesterday, it broke down below to $29,000. Peak hysteria in the no-coiner press, which is most of the press. Peak noise from the bears, peak pain for the bulls. It's the headline story in the Financial Times, which is top of the publication pile when it comes to getting Bitcoin wrong. And Bitcoin then rallies $5,000. It's as textbook a head fake as you will ever see. From false moves come fast moves in the opposite direction. Now, I'm not the greatest fan of Elliott wave theory. That looks at recurring wave patterns in charts, but there are many who swear by it. Now, no matter, if you're an Elliott waver, you will look at Bitcoin's price action over the last few months and you will see a textbook 5-way down. It's as textbook a 5-way down as you'll ever see. Another bullish indicator. Finally, I remind you that 30%, 40%, 50% corrections are normal in Bitcoin bull markets. They come with the territory. In 2013, Bitcoin went to $70, collapsed to $70 by April, and by November it was 20 times higher. So that's the bullish scenario for Bitcoin. Now for the bearish scenario. It's a pretty simple scenario, really. This is a bear market. Crypto winters tend to go on for maybe a year. There was way too much bullish sentiment at the top in April, and one that needs one of Bitcoin's 80% plus corrections to purge. There's another saying in technical analysis that you will have heard me say: the more times a level is tested, the less likely it is to hold. $30,000 looks like it's about to give way. If $30,000 goes, then $20,000 comes into play, and after that $12,000. To go back there would be typical Bitcoin bear market price action. Moreover, the last halvening, when the mining rewards and the inflation rate both shrink, was in May 2020. Post-halvening bull markets tend to peter out after about 12 months. This is the right time for that bull market to have ended. The trend is lower. Trends are powerful things. So, which of those two scenarios looks more likely to you? As you can see, it's quite easy to make a technical argument for both. I can just as easily make a fundamental argument. The technical genius of Bitcoin, the spread into the mainstream, the scalability of tech. These are all arguments for higher prices. Government clampdowns, particularly in China. Green energy, the rising US dollar. They're all arguments for lower prices. So forget about the waffle. What am I actually doing with my money? Actions speak louder than words and all that. Well, I have a long-term position in Bitcoin. I think it's going much higher eventually, and I'm ignoring the short-term volatility. I haven't added to my position, but nor have I taken away. I was tempted to add at $30,000, but not tempted enough. If it goes to 20 or 12,000, I might add. I'll deal with that if and when. I am what they call a hodler, and I'll see you at the beach. Thanks very much for watching. Please subscribe to my channel, and I'll be back with another video very soon.